Hello everyone. Welcome to another episode of India Ratings and Research Expert Launch Podcast. I am Anwesh Akkapolu.
And I'm Rajashri Roy, and we are part of the Structured Finance Analytical team at India Ratings.
Today we'll be discussing the securitization market in India during the quarter gone by. The total securitization volumes in the second quarter of FY25 are estimated to be about rupees 670 billion, with PTCs contributing 54% of the total market share. This takes the total volume in the first half of the financial year to be more than INR 1.1 trillion, a 14% growth from the volumes in the first half of FY24. Now, if we compare the Q2 volumes to that of the previous quarter, there has been an increase of 49%. This is on the back of a relatively flat quarter one. The PTCs continue to be higher than the DA volumes for the past 4 quarters in a row.
Okay, so that was about the volumes. In September of this year, India Ratings has rated the largest PTC transaction in the Indian ABS market. This transaction is named India Universal Trust AL1 and is backed by a pool of auto loans originated by HDFC Bank Limited. It has multiple tranches of PTCs with the timely interest and timely principal payment structure, and the PTC yields are payable to all tranches on a pari passu basis, while the principal payments are time tranched with different maturity dates. Now, apart from this transaction, we have also rated multiple transactions with varied structures and features in the past quarter. And out of this, 65% of them had some form of turbo amortization to mitigate the risk in their structure. Also, in keeping with the trend seen over the years, pools backed by vehicle loans continue to dominate the PTC volumes, especially in the transactions rated by the agency. This is followed by transactions backed by secured business loans, followed by unsecured personal loans, and then by microfinance institutions.
Now, if we look at the live transaction performance during the past quarter, it was observed that the delinquencies in some of the pools backed by unsecured loans are rising. It can be observed in both unsecured business loans and personal loans as well. However, majority of these transactions had some form of self-correcting mechanisms like turbo amortization or excess interest spread trap feature in place. These features help in somewhat mitigating the risk associated with the rising delinquencies. Transactions backed by MFI pools are also seeing their delinquencies rise. As per India Ratings discussion with MFI originators, they have taken certain countermeasures which is expected to eventually provide a check in the rising delinquencies in the second half of the financial year FY25. Indra would be closely monitoring these transactions and developments in these asset classes and would also take appropriate rating action if warranted. Delinquencies in pools backed by secured asset classes continue to be range bound, and these are well within our initial assumptions. None of the transactions rated by the agency has seen a dip in their credit enhancement in the past 6 months. And there has also been no negative rating action in the quarter gone by.
Now, going forward, volumes are expected to be driven by the active participation both of private banks as well as more and more NBFCs taking the securitization route. Additionally, as new investor segments like AMC participate in the securitization market, we expect the Indian market to slowly evolve beyond PSL issuances.
That's all from us today. In case you require further insights on what we have discussed today, you can have a look at our market wire released on the 11th of October 2024. It is available on our website www.indiaratings.co.in. Also, feel free to reach out to us in case of any clarification, comments, or observation. Thank you.